Everything is wrecked. And what do we do when the market crashes? We buy. We buy the dip. We are strategic. We deploy the money that we're been keeping. Oh, Francisco, I don't have money. So if you don't have money to deploy when the market crashes, that means that you have been doing a pretty terrible strategy. Yes, I have to tell you that. This is the reality. Why? That means that you're over allocated. You have put all your money in the market. So you're just waiting for the market to do this, or you just want to react, you just want to plan, or you want to change that. If you have money, let's go and think about it. What happened? Yes, because now the Standard & Poor's 500 is trading below the November 5 of 2024 levels. What does it mean? It means that it raised more than $2.5 trillion of market cap. Imagine that. Yes, I know. Donald Trump was elected. Everyone got very excited, and boom, and now people are crying. Yes, they're crying because they don't plan for the future. But I know you do, and that's the reason you are here to hear all the elements that I have prepared for you for the analysis of today's crash. So the recommendation is, if you don't have money to allocate to the market, don't put all your money in the market. Always have cash. Okay. Check. Crypto also crashed like crazy. Even in one moment, Bitcoin reached 90,000. Crazy, isn't it? Yes. Ethereum 3,000. Solana, beautiful buying points under $180. Those are the points that you want things to happen. But if you don't have money, well, it's your fault. You should plan for these things. Don't just simply allocate. That's the reason we do something called dollar cost average, meaning that every month you allocate more money to the market. Simple. If you have every week, you can do it as well. But let's start with this. These are the University of Michigan expected change in prices during the next 5 to 10 years and the median. Look what is happening. Okay. In a matter of weeks, consumers have seen long-run inflation raising from 2.6% to 3.3%. What happened? Wasn't inflation just going down, as Jerome Powell said? What happened? So this has a lot of implications. Tell me, do you feel that inflation has gone down or is going back again? Or they just told us that and the reality of the market was different? But now, this is the important thing. Because now we're seeing in the indexes how inflation is back on the table. So this is what we call the Fed conundrum. Okay. So the rise in inflation expectations have resulted, well, in rapid spike in term premiums. This is very important. And this is the premium that investors demand for the risk of taking on long-term debt. Okay? So when you're thinking about long-term debt and you raise the term premiums, well, there is a problem. That is why the rates are rising and the Fed cuts. Okay, so this is very important. One thing is the premiums, and the other, the Fed fund rate cutting and going down, which raises the question, what will happen next?
This stock portfolio is heavy. Let's roast it. Hey there, be honest. Does your investment portfolio needs a reality check? I'll break it down for you in 10 minutes. Personalized roast that's honest, actionable, and maybe a little bit brutal. I'll show you what's working and what's failing and how you can make it better without any fluff. Just straight up solutions for your goals. Oh, and I deliver your roast within 72 hours, so you won't be left waiting. Ready? Go to franciscamoney.com or hit the link in the description and request your roast today. Let's fix that portfolio.
With the Fed, the Federal Reserve, what do we do different? Well, let's see. Let's check this graphic. The term premiums have spiked to 0.55%, the highest over 10 years. Just check it. We check it. 10 years, the highest. Okay? And with CPI, PPI, and PCE inflation on the rise, well, general market wide uncertainty has surged. This is problematic because the bond investors are demanding compensation for this risk. Okay? Very important. This is gonna affect a lot of the elements that are gonna happen. Let's take more numbers, guys. So here's a chart for the Treasury inflation protected securities, or as they know it in the market, TIPS. So that is the yield that will effectively grow your capital in line with inflation. Okay. So note that is up from 2024 low, but generally is in the last 3 years range. So that's the reason I put those lines, the red lines. Okay. So in the last 3 years is in line, even though in 2024 increase. So this is very important because without the recent search in term previews, we might not seem a significant steepening of the yield curve. Okay, and this is the key thing. And what does it mean, Francisco? They will ask me. Well, this means that rising term premiums are a result of less rate cuts being expected. So think about that. The Fed cuts, but if they don't cut enough, the premium should go higher. And that's a problem. In fact, it might even reflect that interest rate hikes are back on the table. Imagine that. Have you thought about that just before Trump got elected? No, because this is how the market might change depending on different conditions that the market is showing. And now stocks in the market, the Standard and Poor's falling, well, it's not a good idea. And just check these graphs that from Bank of, and you can see the sources that I put in every one of the graphs, guys. So if you want to consult it, check the sources. So, and this is the worst possible time for stocks, actually, is the worst because fund managers were the more bullish of stocks than any time in recent history. Just ask any fund manager, just like, man, stocks are gonna rise. But cash allocation fell to a record low with equity allocation nearing 40%. Think about that. That's very interesting. In fact, check these graphs. Not even in 2001 or 2008, we saw equity allocation at these levels. Okay? This is very important because then you ask, well, is this gonna change or not? Are fund managers, are the market gonna change? Will that affect all the calculations that we have seen that a bull market is coming? Well, as an investor, you have to prepare for both scenarios. Okay? Both scenarios. And let's go back now what you can do today. Well, it depends of your strategy. Again, are you the kind of short-term strategy? Well, that affects you a lot, especially in the stocks that we're seeing here. If your long-term strategy is good, because then you can DCA, dollar cost average, meaning that you can buy your favorite stock at a cheaper price. But it depends what you want to DCA and for how long. And those are the videos that I like to do. So let me in the comments below, guys. What kind of stocks do you want me to cover? Because I'm covering also not only the big stocks, not only the AI, the quantum stocks, crypto, but also I'm gonna cover in small cap stocks, so we can find opportunities in the market. I want to find micro cap stocks. I want to find like the smallest stocks possible. I just like to do those kind of stuff, guys. And Yeah, those are the kind of things that I'm seeing. Um, because the market is crazy, it crashed like crazy, and people panic. People panic, and I'm gonna show you a very important metric, which is called the fear and greed index. That I like to use it both on Bitcoin, in altcoins, but also in the market, because now you will be able to. Am I the only investor that is happy about this? You know, this is the sentiment of the market right now. Look what is happening, my dear friends. It's going to extreme fear. They're afraid that a market crash bigger than this is coming, that a global crisis is coming. Well, let's see what the great Warren Buffett always said. I will tell you how to become rich. Close the doors. Be fearful when others are greedy. Be greedy when others are fearful. And that's the reason he has more than $200 billion ready to deploy in these situations. He might even wait for things to go a little bit lower, but it depends on your strategy. So it is simple. Let me show you what is the graph. When you see the graph going on the extreme fear, it's the best time to buy. If you see the graph going to the extreme greed, it's the best time to sell. If you follow this principle, I assure you, you will be 90% more profitable than the rest of the market because it's counterintuitive. If something falls, you feel fearful, therefore, you want to protect. But that's when you have to be greedy because that's the smart thing. Most people, even though they have been seeing that and know that, they will not do it. So let's see some stocks that I love to DCA in this time. Start with Palantir stock. The Palantir Technologies, PLTR, great stock, great company. Even though there has been some discussion about the revenues versus PE, I have a full video on that if you want to see why Palantir I think is one of the best stocks. But it's a company that is the basis of all the defense technology of the Western world. So in the past 5 days, it has gone down 18%. Imagine if you just bought it, a couple of days ago. You will just lose money, yes. But if you have a clear strategy that Palantir might be a company of $500 billion in the next decade, well, it's a good buy. Novo Nordisk. You know who is the creator of the number one drug in the US right now? Well, it's a Danish company called Novo Nordisk. And I covered them and I think they're a great company. They produce Ozempic. Yes, that drug so people can just lose weight. Yes, they produce Wegovy. And I have a complete video about Novo Nordisk so you can analyze. But, the past month, down 18%. It's beautiful. Good time. New Holdings are one of my favorite companies ever. And this is not financial advice, remember, guys, not on this video. But since Nubank did their IPO, before that, I did a video about the IPO and why Nubank was a great opportunity. It's the largest digital bank in Latin America. Imagine number one in Brazil. And it's just $50 billion company. This in the next decade could be $500 billion company. Solana, great cryptocurrency. I have a video about the Solana ETF that you can watch as well. And when people have been in crypto and have used it, they know that Solana is extremely fast and extremely cheap. You can do transactions for 1 to 10 cents of a dollar. It's incredible. There's a platform called PampFan that has more than 50,000 tokens being deployed every day with billions of dollars in transactions. I always say that Solana under $200, it's a great buy. And when you go a little bit into the dashboards and you see these graphs, normally when it's orange, it's a great time to buy. It's like the best time to buy. It's just beautiful. And this is the message for you today. So even though if you panicked, breathe, drink a cup of coffee, or do what I'm gonna do next. I'm just gonna go for running. Yes, I'm gonna do my night running. um Thank you very much, guys. Follow, subscribe, comment what kind of company, what kind of stock do you want me to cover. Thank you very much. And if you have reached till the moment of this video, like till this moment, I'm gonna give you something. You know that I have my roast, that you can get your portfolio roast. So if you have reached this part of the video, just write in the comment roast, and I will give for free the roasting service for your portfolio. That's it. Thank you very much. Have a nice day.